Over the last couple of years, we've talked about quite a lot of companies, right? And yes, sometimes we do talk about some potential companies that might be the next Amazon, correct? I mean, we've all made those assumptions when looking at the Amazon of Latin America, the Amazon of Africa, the Amazon of Asia, Southeast Asia, you name it. It's always the Amazon of this, and that. But in truth, it's only one Amazon. There is one Amazon, and that's the one that was founded by Jeff Bezos, and that's about it. I don't think there's going to be the next Amazon. But in my opinion, the company we're going to talk about today is, as close as we will get to a company that might resemble Amazon of the early years. Not the Amazon with AWS, because this company does not have an AWS, but its logistics network, its shopping ability Prime membership equivalent is quite impressive. Plus, it's a founder-led company, high expectations. Yes, you might say that he thinks he is Jeff Bezos, he thinks he's running Amazon, but in my opinion, he's putting the bar quite high. I rather have that than putting the bar quite low and still thinking that you are Amazon and Jeff Bezos. Of course, I'm talking about the South Korean company. I'm talking about Coupang. Coupang right now has a market cap of $40.89 billion. Year to date, it's up 41%. Last year, year over year, it's up 44%. Of course, a lot of the growth came in the last couple of months. We've spoken about Coupang a couple of times in the portfolio episodes as well. It was already there at around $17 or so, but I did sell for a quick trade. But I still think that this company is quite a good one, despite seeing its forward PE here at 99.9 times. It is higher than the 3-year mean or so. EV to EBITDA still at 28 times. Price to sales 1.3 times. Then price to free cash flow, that's in the last 12 months, sits at 28.1 times. Don't get scared away just because you see here forward PE at 99.9 times. There is a reason why it is a bit higher right now. The reason is they basically took over of Farfetch. Farfetch is having a negative impact on their bottom line. But overall, this is a fast growing company, has lots of cash, and I don't think they're getting smaller anytime soon. If we look at the analyst expectations for the coming fiscal year 2024, we're taking a big hit here, 38.8% decrease year over year with regards to EPS, then a huge reacceleration in 25 and 26, 288.48% and 48.47% year over year growth respectively. With regards to top line growth for fiscal year 2024, around 25%, then a small deceleration, 13.67% in fiscal year 25 and 15.34% in fiscal year 2026. Now, you might say, oh, that's not a high growth company. Well, in my opinion, this is a growth company that is growing top and bottom line at quite an attractive pace and generating quite a lot of free cash flow. Now, before we dive into it a bit deeper, do share your thoughts about Coupang down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So in the recent earnings report, we can see that total net revenue increased 23% year over year. Gross profit increased 36% year over year, but net income attributable to Coupang shareholders, stockholders in this case, decreased 95%. Free cash flow also decreased 74%. Now, why did that happen? Well, as you can see here, it would have been $98 million if you exclude the losses of Farfetch. As for the other metrics, Product Commerce active customers is up 16% year over year to 21.5 million. So it's pretty clear that more and more people are ordering through Coupang services each and every quarter. If we look at operating cash flow and free cash flow in the trailing 12 months, operating cash flow is up $1.2 billion year over year and free cash flow is up $1 billion. Of course, if that continues, it's safe to say that this company will have quite a lot of cash to play around with, whether it is to expand the business outside of South Korea, like they're doing right now in Taiwan, or maybe buy back shares. Now, with regards to buying back shares, right now dilution is only up 1.5% year over year, so really not that much. If we go look at a couple of comments that were mentioned in the press release, so with regards to the developing offering segment, that's including international, Coupang Eats, Play, FinTech, and Farfetch now, net revenues was $620 million. That's up 337% year over year on a reported basis and 346% on an FX neutral basis. Now, if you exclude Farfetch. The growth was 134% year over year on a reported basis and 143% year over year on an FX neutral basis. In my opinion, that still is quite tremendous growth, of course, coming from a smaller base. But if that can continue, let's say if that can continue above triple digits, this part of the business is going to take a larger share of the overall revenue, which is great because then you're going to see probably some reacceleration in growth estimates with regards to sales growth year over year. As for the developing offering segment adjusted EBITDA, that was negative $186 million, which includes a negative $31 million impact from the consolidation of Farfetch. Now they say here, our results are a reflection of our commitment to customer experience and operational excellence. We continue to focus on wowing our customers. Why do they use the word wowing? Well, because their Prime membership is called Wow membership. So wowing our customers as we remain just single-digit share of a massive and highly fragmented $560 billion commerce opportunity in Korea, and at an even smaller share in Taiwan. With the addition of Farfetch results in our developing offering segments, we now estimate that our 2024 adjusted EBITDA losses for developing offerings will be around $750 million, an increase of just $100 million. We also anticipate that Farfetch will achieve close to positive adjusted EBITDA on a run rate basis by the end of 2024. That's pretty big. And now, purely talking about the opportunity in Korea, right? $560 billion. I mean, taking 10% of that, or maybe even a bit less, the opportunity is huge for Farfetch. And being a company that is worth less than $50 billion today, I think it could be in the long run a multi-bagger type of opportunity. Moving on to some comments from the earnings call with regards to the WoW membership. So last year they provided $3 billion in WoW membership benefits. This year they expect it to be $4 billion. What type of benefits do you get? Well, this includes free access to exciting sporting events like the MLB season opening games they hosted between the Dodgers and the Padres in Korea in March, as well as world-class European football matches that they bring live to fans in Korea each summer. They also recently began providing unlimited free delivery on Eats for WoW members across Korea to eliminate one of the biggest recurring costs for consumers in food delivery. And by the way, Coupang has increased membership fees by 58%, but I do think that those will only come into play in August, if I'm not mistaken. So you're definitely going to see some positive impact from that, with regards to the bottom line, of course. Whether or not it will impact the membership growth remains to be seen. With regards to Eats specifically, they say that the free delivery option has really unlocked a lot of growth for Eats. They saw the single largest increase in orders and customers in the history of Eats. Eats continues to be unit economics positive, excluding one-time merchant acquisition cost, and the majority of WoW members are still not on Eats. By the way, for the overall business, they expect to reach profitability faster in Taiwan than in Korea. Taiwan still early days, still quite small, so it's going to take some time. Now, with regards to WoW members, this was a figure that we only get that in Q4. So last year, Q4, it grew 27% year over year. Since they say that the majority are still not on Eats, I mean, there is quite some upside ahead. Remains to be seen how much growth we're going to see in 2024, if those price increases will impact that negatively or not. But so far, we're growing quite fast. And so right now, if we look at the stock, this on the weekly, we are a bit overbought, currently at around $23 or so. We've seen the stock rally from the lows here at the start of February, where the stock was close to $14. Now we're closer to $23. It does seem that once we got over that $20 mark, which was previously a resistance point, we continued to go up. We're now steadily over the 20-day moving average, which sits at around $22. The 51 still sits at $20.47, and the 200-day one sits at $18. But like I said, on the weekly, we are overbought. So overall, to conclude, is Coupang the next Amazon? Is Bomb King the next Jeff Bezos? Probably not. But if we're looking for that, the next Amazon of this place and that place, I do think that they're doing quite a good job so far. The opportunity ahead for the company are also extremely, extremely high. So if they're successful with that, yes, I do think that this stock is right now quite cheap compared to what it can be in the future. But of course, I can be completely wrong. It's just part of the journey. We'll continue to cover this company and follow their performance each and every quarter. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.